Hello and howdy, this is Robert Morales, our CEO Network. I'm using my Tom Skilling voice from Chicago, from the greater Chicago area. If you tune into Tom Skilling on the weekly weather, you'll get to hear his voice. But we're not talking about weather today, we're talking about the housing market. With me, as always, the bright, the one that makes the cutest babies ever, Miss Ashley Perkins.
Hello, everyone.
Gotta get closer. Bring the mic.
Hello, everyone.
Watch where you put that. Watch where you put that mic. It can be very dangerous near that mouth of yours. It's almost winter and it's getting a little cold. Have you noticed?
Yeah, I mean, you can see I'm covered all up.
Well, it's Arizona winter.
Yeah.
Because we're getting a little burr around here.
I was freaking cold this morning. No, legit, I was cold because my a-hole kids put the air on 70. I woke up and I was like, it's time for you guys to get up for bed as ice flakes are coming from my face because I was drooling on the couch.
Wow. That's very elaborate there. We're coming off a long weekend, or at least I did. I went off to a Pine Top, and it was a little chilly actually this weekend. So.
Yeah. You didn't tell me you were going out of town.
Am I supposed to check in with you every Friday?
Yeah. You're supposed to update me on things. I need to know if you're going to be here on Monday.
Yeah, I'm here. I'm always here on Monday. I'm always working. What do you?
I know.
Anyway, but yes, we're here talking about the Phoenix housing market every Monday, the Monday Market 15th, a 15-minute show that takes more than 40 minutes now. So we've broken new records. So if you have any questions or comments, go ahead and drop those in there. We love it when you tune in and watch Ashley get crazy. You know, not today. Today's.
I don't know. I'm a little spicy today.
Oh boy, I can tell. So we wanted to lead off a little bit. So the title today is BURR, using the BURR method. So we wanted to explore different opportunities that are coming up, I think. The rental market's going nuts right now. Have you noticed? Have you noticed anything?
Well, just the signs in my neighborhood, like for rent. I'm like, where are the for sales, bro? Like, where'd you guys all go?
Yeah. So like I'm starting to see two markets really just going into stagnant mode. So you have the resale market, new construction, all that, everything that the news talks about is kind of like being halted. You know, not too many buyers out there, a little bit timid, and sellers are getting a little bit timid about listing. So instead of going the sales route, they're kind of going towards the rental route. Mm-hmm. But the rental route is also being impacted too. I mean, I can pull numbers now, or we can talk about the articles.
Well, I mean, that's up to you.
Well, I guess I'm in control of the board. So in a slowing housing market, sellers ask, why list a home when I can just collect rent?
Yes.
Which is very true.
I was threatening my boys the other day about our house, and I'm always threatening them. They love it. I'm like, you guys, what about if we move back into that like townhome that we used to live in, like that area, and we could like rent a house. Yeah. And then they have a dog park for the dogs, and it's going to be less expensive. And then, we could like make extra money off of the house, and all this stuff. They're like, are you crazy? Like, yeah, maybe a little. I'm thinking more of like logistics, like financial, future, all that. They're thinking we got a backyard and our own pool.
Have you looked at that Swimly app? There's like an app where you can rent out your pool.
Nobody wants to run our pool. Our diving board broke off. Like, it's green right now because our little Hayward guy, I call him Hayward, the one that's supposed to clean it, gets clogged all the time, and it's so annoying.
Yeah, I logged in. I downloaded Swimly to rent out our backyard pool. I'm thinking of like different ways. We've been in that stupid ass house for like since October.
Your house is not stupid.
But we haven't used the pool yet once.
What?
I've cleaned it more than I've actually used it. Actually, I haven't used it, so I have
turns green. The boys still like get in it.
Well, it's more like just a paddle pool.
Yours is a smaller little quaint space.
Yeah, it's like a.
And you really can't skinny dip in your area because you like don't have a wall to like block off everything.
Why is it skinny dipping?
I don't know, because it's just you and your wife because you can. Like, could you imagine if I tried to? Like, no way in hell.
Our neighbors suck, by the way. They were playing their music and stuff. You can't even enjoy the the house that I have, it's got a little bit of a lake, and then if you in these little quiet moments, you can hear the ducks in the distance.
I know,
and you can
it's
hear
cute.
the waterfall and stuff. And you're just sitting there like, oh my god. And then next door it was Despacito for like literally an hour.
Why didn't you just go over and pour a drink and be like, hey?
Well, I'm not that kind of Mexican.
Oh, shit.
I'm not.
You need to reevaluate that.
I know. I gotta get back into my mode. But people are choosing rentals as far as like instead of selling because interest rates are just were at a year ago just horribly low, or I should say greatly low, wonderfully low.
They were unrealistically low.
And given a year later, people are going into looking for housing because they can't purchase it anymore. Interest rates are rising, so people are looking for different alternatives. But in our market specifically, I'm not really seeing, a whole lot of gravity towards renting. I don't know where people are going. Like people were just moving here in droves,
and where the
buying,
hell are they?
Renting, and
where
going everywhere.
Where are you?
And
they will find you.
What I'm seeing in our current market is like nobody's buying and nobody's renting even.
It's intriguing to me because you being a real estate agent, I'm assuming you deal with a lot of people that want to downsize.
Yeah.
They want to downsize. Their family's often gone, and they've got this big old house, and they don't know what to do. Hell, if that were me and my husband, and we were downsizing, I'd be like, we're gonna rent out the house, use it as an investment property. We're gonna go live in a little tiny studio. I don't care where we live.
Yeah.
And make money off it, have it as a tax write-off, and maybe, pay somebody else's mortgage, but it's more of a benefit for, in that situation, to rent out a larger home while just renting. You know what? F it. I would buy a goddamn RV. I already told you guys this. Like, we'll buy an RV.
Where'd you park?
Take out, I don't know.
Walmart, I think Walmart will let you park there.
They will.
Yeah.
This is shit you not off a Raintree in Scottsdale. They will let you park your RV in their parking lot. So if you think about it in that extremist way that I'm speaking of, you can take your property, rent it out, maybe take a small HELOC out of it, buy your RV, live in the parking lot at Walmart. It's very convenient, apparently.
Yeah, if you see a blonde woman in a Walmart parking lot pitching a tent, it might be Ashley.
But there are so many alternatives outside the box, which goes back to our BURR method. So we buy a property, whether you bought one now or you're thinking of buying a property.
So you're talking about the BURR method. So
correct.
If
it's
I may,
always beneficial to buy a property.
Do you want to talk about the BURR method, Miss?
Well, I haven't done a ton of recon on it, but like it simply says, buy, rehab, maybe you don't have to, rent it out, refinance or do a HELOC, and then repeat. Take that money that you put in for the HELOC to maybe purchase another property to rent out. And now all of a sudden you have multiple streams of income coming in because what do we have? What did you say last time? 157 people a day moving here looking for rentals?
The last time we checked it was like 300 net migration. So we had 300 people a day coming in here. People are leaving and coming all the time.
Well, and then going back to those people that, again, to ask you this question, people who are trying to expand their family. They're going to have a baby and they're like, oh, we need a nursery. No, you don't. Like, put your kids in the same room.
Oh boy.
Have a bunk bed. Have a bed in a cradle or a crib or whatever the case may be.
Some people can't live like that.
Well, they're going to have to learn.
Well, in this environment, I mean, it's difficult to find anything like, housing period right now. But as far as the BURR method goes, I'm going to put that back up.
Yeah.
Buying, and I think there might be a tremendous opportunity. I'm not a financial advisor anyway, but in the next few months, if you hold on to cash, you buy down. So if you're, again, no financial advice, but if you're in a position right now where you have extra money, I would buy down any kind of expenses you have, because I believe the dollar is going to remain strong, and then into next year will be an opportunity as these houses continue to decline in value, or prices, I should say. There may be some opportunity beginning of next year. I don't know where the housing market is going to go. I mean, looking at, I guess I'll pull up that number real quick. Looking at our supply, we're going back to a 2019 supply here. Come back. Look at. So as you notice, our month supply in our resale environment is at 3.1%, or sorry, 3.1 months supply, which is roughly just before 3.1 was just before the big cough. Oh boy. Like a year ago, I would have been like, "Oh my God, super spreader."
No, it's pretty wild. And even if you do go into a property, and this is just my personal opinion, and you may buy a property, and you may not be able to take that second portion where it's like refinance or take out a HELOC because the market is declining a little bit, but you're still going to always have that rental opportunity.
Well, see, even Helix right now. So that's something. If you read this article, this other one that we had pulled up, we jumped a little ahead, but this article too is also talking about interest rate hikes and that HELOCs are at risk of their interest exposure is greater. Mm-hmm. So as the Fed increases interest rates, we're looking at HELOCs at a higher variable rate because HELOCs tend to be variable. And I don't know the term. Last time I had a HELOC was like 12 years ago, and through my experience, it's like never again.
Oh yeah, I've never had one.
Because the terms on those are different than a 30-year fixed mortgage. And so ignorantly, I got into a HELOC on my second home. Took out like 75 grand out and put a pool in, did all this stuff to the backyard, which if you're going to buy a house, buy it with a pool, do not install one.
Oh my gosh.
Because you will end up spending a lot more money. So I put it in about 75 grand in my backyard of my second house and ended up, the resale value on it was only about 35. So, and it just buy one with a pool. Do not install one.
Well, that goes back to like the third
but
part
those
of BURR.
The HELOCs are going crazy too.
So you buy, you rehab. So the second part, rehab. So when you if this is something that you want to do, buy and rehab, really understand, and you hit the nail on the head. You wanted to put a pool in to increase the value or the attraction of the property to rent it out. But at the end of the day, doesn't increase what it would appraise for.
Yeah, don't if you're going to buy a rental, and this is again my personal, not advice, just what I'm saying. If you're going to buy a home, try to limit your exposure to expenses. So non-HOA homes. I like brick homes. I like stuff without pools. I like houses that have at least the roof and AC moderately either redone or fairly new. Your biggest expense, your biggest cost in purchasing any property is going to be your roof and AC unit here in Arizona. Well,
that's why you have to take into consideration what they call ARV. So that's the basically it's the after repair value. So the after repair value would be you don't want to increase more than 70%, right? So if the home is worth $300,000, you really don't want to pay more than like $210 for it. And assuming that you are going to put in X amount of dollars, and hopefully you have a spreadsheet that has every detail on it. I'm talking about pipe fittings, 98 cents. I mean, there's so many small details that add up over and over, like new garbage disposal, 150. Really evaluate the property and understand and have that spreadsheet ready. So $300,000 I'm going to buy it. Or I'm sorry, I apologize. $210 I'm going to buy it. It's potentially valued at $300 after repair. Where am I in between?
Yeah, so my kind of frame of reference, my rule of thumb when it came to investors, because I initially the first few years of my career in real estate were helping investors. You want to look at 60 to 80, so 60% offer price or valuation towards a home given the market value. So a $100,000 house, make it easy. You want to offer about $40,000 because there's a lot of spread there in a rehab situation. Because then you want about 20% rehab and hopefully 20% yield off the resale of that. If you don't have those margins, then you're looking at probably a little bit of pain. You want to walk away making money basically. So you want to estimate that it's an estimate. So depending on the price of the rehab, depending on how much it's going to cost to repair things, you don't want it to go over that 20% margin. And you want to leave a little bit of room too, because you don't know what you could find out.
Yes.
We got into a rehab that it was a brick house. It would not, like in your mind, conceptualize it would have termites. But as we broke into the master bathroom, the whole master bathroom had to be redone because it just termites just ate through the whole master bath.
Nope.
You don't like termites?
Termites and scorpions.
Oh, I didn't know that.
Snakes, I can deal with cockroaches.
We're just talking about it. We don't have termites or anything here.
No, can't deal.
Oh boy,
they're so gross.
So sensitive.
No, I can deal with a few things like that. Few things, but you're right. So when you go and you use your spreadsheet and you're like, okay, it's only going to cost $10,000 to rehab this. Add another 15% on top of that, and if your ARV includes that, so I love your analogy, 60%. At your cap is 80%. Once you've done all your repairs, between there, you need to, even if your cost is, let's call it $20,000, add another 15% on top of that. But still within your 60 to 80. Buy it at 60, rehab it, finish rehab at 80, whatever the margin is between plus 15%, if that makes sense, that's where you need to be, because we all get so excited. And they're
a 60% would be on a resale. For me, you know, the advice, not advice that I give, is 80% on rental. So if you're going into it purchasing a rental, for instance, you want to offer, your max should be about 80% to value.
Assuming it does not need repairs. Roof is good, air conditioning's good.
Well, you hope you're still going to offer 80% to value.
Cool.
You know, and you're going to anticipate there's about 10% buffer there or repairs, because you want 10% to kind of, if you need to get out of that investment vehicle for whatever reason, if you need to drop it, you can sell it and typically break even. But the intent in getting into a rental property, purchasing it, you don't want to necessarily offer more than 8% value.
So what is your opinion on this? So I get into this property, right? Oh, and I come in at 80%. Come to find out it has termites or some other things happening to it. And now I'm like, Nikes. I'm now at like 90% loan to value of it. I rent it. I'm like, okay, I can handle this. I rent it out. Yeah. I rent it out. The rental market drops, right? So now I'm renting it for a little bit lower than what my mortgage is. In my mind, it's still a tax write-off. And I know the market's going to eventually go up. How would you suggest somebody swallow that pill?
So I actually was in that situation personally. You know, I will go through my scenario. We were renting out that particular home with the pool at about a $200 loss a month. We were using that. If you legitimately use it as a business, because there's some people out there that rent out their house cash under the table, you know, but if you have to legitimately set it up as an LLC or legitimately set up as a business, and you can use that difference as a tax write-off or a tax incentive, whatever the terms are. I'm not a CPA. I give this crap to Ryan, and he just does all this stuff.
Yeah.
But he tells me what I can use and what I can utilize with that. But essentially, that loss each month, you can claim it as a loss towards the end of the year. It's a loss towards your business as not an expense, but
no, I mean that
maybe.
That happened.
Any CPAs out there that can correct me on this?
We do need to get a CPA in this show, because I definitely need one right now. Yeah. But even with like my salon, right? So everyone's like, oh, and I brought this up before. You own a salon. I'm like, well, I don't own the building, but my partner Amber and I, we rent out the spaces. Like we are in control of a lot of it. Yep. And there was a time during COVID, I was going to die. We were at such a loss. And now we're at a little bit of a profit. But at the end of the day, we still have the benefits because it is a business as a tax write-off. So for me, everyone's like, oh, why do you still keep it and maintain it and attend to it and all of this? I'm like, well, because I still do makeup and hair. I've done it for 20 years. Yeah. And it's still a tax deduction for me. And I really enjoy it. Like, I enjoy doing it. So it's worth, like, sometimes you have to take a little bit of suffering. That's totally the wrong word. A little bit of a loss here in order to know that in the long run, you know, whether it's year after year, we have some really awesome years and we have some really not awesome years. But at the end, it's worth it. And I believe with the BURR method, buy, rehab, rent, refinance, repeat, to me, in the long run, if you keep that property and you buy it now, let's call it at $290, 7 years from now, because the real estate market's in a 7-year cycle, typically.
7 to 10 years,
yeah. It's going to be worth it. So if your plan is to buy and hold and rent, take out the equity and repeat that again, and now all of a sudden you have 32 properties, genius.
Yeah, I mean, it's really your risk tolerance, kind of where the direction the market's going. It's really where you're at in life. I would say if there's anything, if you're getting into investments, period, is to really work on that credit score. That credit score will open you up to a lot of different financing options and having a lower score. It's not just about saving money and having a down payment. It's actually your whole life has to be in line in order to kind of purchase that or make those decisions. But at the end of the day, too, your confidence level and where you're at is really going to impede whether or not you're willing to take that risk. I will say, and I'm not a soothsayer. I don't predict the future, but I do believe there's going to be a lot of opportunities coming up at the beginning of next year, because I think there's going to be so many investors that piled into this market, especially in Phoenix, and they bought all these properties thinking they were going to hedge inflation. I think these next few months will definitely show where we're at with those investments. So all those investors that were paying cash, buying out, I'm starting to see that with Open Door. You know, as I look at their company stock, here, let me pull pull this up.
Oh yeah, you're gonna pull the stock.
Pull the stock up. So as I look at some of the company stocks too, I mean, this is Open Door. This is very telling on their strength as a business. You see a lot of Open Door houses that were purchased at a very high price that are just continuing to fall and fall and fall. You know, and they're going to be taking the losses. I mean, there is so much overhead when it comes to maintaining just vacant houses. You have utilities, you have just general maintenance stuff, you have just foot traffic coming in. You have issues when the house is just sitting there, it's not moving. And Open Door has a ton of houses on the market right now, just sitting, 60, 80 days, well overpriced than what they are. But the company itself, you can see, is a decline. But that's just everywhere else. I mean, looking at market sentiment with every kind of stock that relates to housing, like Redfin, Zillow. I don't have to even mention, where we're at in stock prices. You can just look at the lines where everything is just declining. Lennar is like one of the biggest home manufacturers. There's a lot of negative sentiment towards this market right now, and that negative sentiment is really what gears people to purchase or pull away from this market.
Do you think, though, that these people were so advantageous and became extremely pompous in the buying market? So when we talk about BURR, this is about making, in my opinion, as just a single person, I'm not a hedge fund, I'm not a big company, making a personal investment for my future and my legacy and my children's future, right? So that's legacy, obviously.
Yeah.
They got way in over their heads. BURR is more of creating your own financial wealth through buying homes without getting too much in over your head.
Yeah.
So it's like we can look at all these and see the crash, but now guess what? We can take advantage of these bigger companies that failed and become our own little small entity of our own little company for our own little family legacy.
You think there's a crash? Is that official? Perkins?
I don't think there's a crash. Like you texted me earlier, like it's getting very sluggish. It is getting confusing for people.
Yeah,
don't allow it.
What I see in this market is, again, you have buyers that are pulling out, you have sellers that are pulling out, and maybe that's a reflection of the rental market right now, because we really haven't been watching the rental market listings. There are roughly about 5,000 rental listings active in the Phoenix market. I wish we had a barometer. I guess today will be the start of that barometer. Yeah. When we started the year, like in the resale market, we started off the year with about 3,000 listings. We're at 17,000. And that's a reflection of where we're at in the overall market. So we've been following the dashboard since the beginning of the year. Yeah. And supply is still a little bit low, which is, again, kind of propping up those prices. Demand is significantly pulled back, and we're in a balanced market, essentially. Looking at different indices that influence the market index.
But the cool thing about this method with BURR, so you buy a home. Yeah, you might buy it at, where are the interest rates right now? I'm just going to throw out 6.5.
Oh, you want to look at interest rates?
Yeah. You buy it at 6.5, right? You might rehab it, throw a few dollars into it. You rent it out. You may make a dollar. You might lose a dollar.
Why do you want to know rates? They're horrible.
No, I know, but so this is where I'm going. Now, all of a sudden, maybe you hold on to it for a bit. You use it as a tax write-off. Interest rates drop. So they go from 6.5 to, let's call it 3.5. Now, all of a sudden, your mortgage actually declines. You're still renting out the property. You're making more of a profit. You have more of a profit.
Yep.
Perhaps the housing market increases. You're able to take out a little bit of equity and repeat. There's always options. You just have to be very strategic. And when I say strategic, everyone's like, how can you be strategic if we don't know what rates are going to be? We don't know if the market's going up or down. You have to have a plan. And from day one, what I say, Excel spreadsheet.
Yeah, you have to be well informed, have a good sense of your trajectory, and again, your risk tolerance has to be kind of in check. If any kind of investment, anything, even relationships, putting your time and your money into a relationship time is a risky move because things could happen. Never mind. So, like I say. I'm talking about me.
Oh, okay. Good
You've been married once. I've been twice, buddy.
I have only been married once. I'm proud of that.
So get your credit in line is really the first line of defense. Get your credit in line because I'm looking at a credit score of 7. We'll do a regular 5%.
That's a freaking unrealistic credit score, by the way.
I'm coming to my point.
I
I'm looking at
yelling at me.
Oh, sorry. Okay, so 780 credit score will get you right now at a $400,000 house, which is a roughly, a little bit lower investment. It's not, our median price point is still about 450. So this is below our median price point in the Phoenix area. And generally speaking, this is probably where you're going to start right now today. But if you have a 780 credit score, you're looking at 6.5% interest rate. But if you're starting off and your credit score is, let's say 620.
That's the average.
You're jumping up a whole percentage point. And 1 percentage point over the term of 30 years.
So what we're
Ashley was supposed to answer
is,
that. I don't know the answer to that one.
yeah.
I guess I
I
can
don't
look it
have
up,
an
but-
amortization chart right now available,
Hold on,
but I'm pretty sure
keep
what
talking now,
Robert
okay.
is saying is we should go buy a home in like Idaho or Texas, where you can get a mansion for $250 versus a tiny little condo, because Arizona has the smallest parcels in America.
Yes.
We do. So I don't know if Robert is available to sell you a home in Idaho. Idaho?
No.
Idaho?
Idaho.
But there are other states. So
Holy
the BURR method doesn't have to be just in Arizona, you guys. This could be anywhere. So for example, you could go to, look into small towns. Look into like Nest City, Kansas. Nest City, Kansas, you can buy a house legit for like 20 grand. And even at an interest rate of 7.4, rent it out for the average out there, you're still going to profit. Start thinking outside of, well, I know not everyone that watches us is in Arizona, but I'm just using this as a concept because we talk a lot about Arizona.
They can learn from us.
Start thinking, if you want to invest and you're like, I want to invest in Arizona, hell no. Go to Michigan, go to South Carolina, go to these itty bitty small towns where they have old houses that have been around since like the 1930s. Yeah. Buy a plane ticket, go out there, figure it out, rent it out, and do the same concept as BURR. And it might be a little bit colder out there.
And the cool thing is, like, I only know the Phoenix market, really. I'm not exposed to, like, I do watch national news, but I really just, like, again, I focus on Phoenix. If you're a buyer or an investor, just call a real estate agent. I mean, look them up and call their office, call as many agents as you can. I mean, the offset of that is they bug the shit out of you. They'll call you like 40,000 times if you're trying to buy a house. But each one of them will give a perspective, so you can kind of have an idea of each market. I will tell you the other chance you take in calling agents, it's like it's always the best time to buy. It's always the best time to sell. And when you're ready to sell, it's like this is always the best time to do whatever.
It is,
which is kind of funny.
One of the great things, though, if you do find an agent that maybe, perhaps like Robert, who understands Arizona, as he stated, just to echo him, he might have a referral of somebody. You're like, hey, my family's from Augusta, South Carolina.
No, Georgia.
Or Georgia. I mean, anywhere you want. Like, let's just
wherever
think
there's
about
an
it.
Augusta.
It's in South Carolina. But look in these smaller markets, and maybe Robert has within his realtor group somebody that might be licensed in there because they came from there. Now you're going to have a referral and have somebody who is well versed in that community and that understanding. So if this is something you truly want to do and invest in real estate, and you're so over the Arizona market, consider renting out your property in Arizona if you're downsizing. Yeah. Whether you get an RV or you just go into a condo and you rent from them.
Like Ashley.
Live in Walmart parking lot. Take that money, invest in a smaller town in another city. Allow Robert, because real estate agents can property manage for you as well, which is really awesome. I don't know if you guys know this, but real estate agents have the ability to also help you property manage your property. Whether they do it themselves or they have a referral for
There's
it.
some out there, yeah.
There are, for sure. I mean, there's so many options I feel like people aren't aware of, and they're like, well, I have this extra money, or I want to do this, I want to do this. Like, we have to start thinking way outside of the box, like way bigger than we think we are.
Yeah, I think, and again, if you're holding off to invest in this market, I would say there's probably some great investment opportunities, but they come with a lot of volatility, and I think we're not going to see the head of that volatility until mid next year, possibly, because everybody waits for the bottom. Everybody keeps asking, is this the bottom of the market? I'm not too sure it is. I think there's some things kind of coming up, but going back to the amortization calculator, get your credit in line. That's if there is advice. I mean, again, I'm not a financial planner or advisor. Get your credit in line. So going from a 6.5% right now, $400,000 home for 30 years, you're looking at a $2,500 payment. If you end up being on that lower credit score at that 7.5% payment or interest, you're looking at 27. So you're paying about $400 more a month just because your credit score isn't in line yet.
I love that you brought this up. So recently, my credit card companies,
you're paying $1 million on $400,000.
I know, it's insanity. But they've been offering me higher credit lines more recently, and I'm like, you know what? I'm going to take it because if you know anything about credit, the higher credit line and the lower the amount you spend, it'll boost your credit score. So most people will be like, oh, they're giving me a higher credit line. I can use it. It's like, $1,000 more. And then they go out and spend it. No, allow your credit card companies to increase your credit line and the amount of money that's available to you, but don't use it. I mean, if you were in dire straits, use it. Fine, whatever.
Not a financial advice.
Know that your credit score is going to go down. This is Captain Obvious. This is not financial advice. It's the true statement. I mean, you can Google that shit. But allow them, do not discredit when you get that email like, your credit line has been increased by X amount of dollars. Take it because it will actually help improve your credit score. We had Shyla on here. We were discussing, not that this specific thing, but Shyla is a great resource. So if you are in need of wanting to increase your credit score or concerned that you may not be taking the proper measures to increase your credit score, if you're considering doing something like the BURR method or even buying a house or whatever that may look like, we have the resources. Robert and I both have the resources for you to help you with your credit score so you can go on this cool path of like real estate, like
stardom.
I don't know, real estate.
I don't know.
What's the word I'm looking for? The magical world.
God-like heaven, real estate heaven.
I don't know.
Anyway, so the reason we brought up rent today is because rent is one of those options that people have instead of selling. I think right now people are concerned about their wealth and kind of what's going on. Potentially a recessionary environment where, we're pulling back, businesses aren't doing so well. And there's a lot of concern, a lot of FUD out there. And with FUD also comes opportunity. So if you hold on and if you're a little bit more strategic with your own finances, I think you'll come out, one, ahead, but two, the ability to purchase homes that you weren't able to purchase in the last 2 years. I do see rents kind of coming to a head too. As we're preparing and as we're seeing, rents are kind of like at this kind of epiphany, like short kind of. It's coming shorter, coming to a head. So people who thought that they could rent out their house for a very high rate still have that same ideology, just like how they had like 4 months ago when they said, I'll just sell my house at the largest prices. And then as we're on market 30, 60, 90 days, you're starting to have a stark reality or a reality check that things aren't going like they were 6 months, 9 months, 12 months ago. But I think we're coming to a head with the rental market too. So that will influence also your decision-making as you are contemplating whether or not you sell, whether or not you rent, or your situation. Miss Miller, is there anything else we need to?
You just got so serious on me.
I know.
Just like rent out your big ass home, except the fact that you're having a baby and you're gonna have to have a bed and a nursery, like either in your bedroom or your other kid's bedroom, or buy an RV with a HELOC and figure your shit out. Like,
if you got a big house, actually consider doing like a wedding venue.
Don't you even get me started.
We're over on time.
That is going to be a whole other conversation, but you can even consider maybe renting out a room to somebody. I mean, there's lots of different options that are out there. So
that Finder, that I download the app. Hold on. That's not Friend Finder. That's something else.
But consult your real estate and your CPA.
Furnished Finder. Download the Furnished Finder app. That's if you have a room to rent, if you have, like in my situation, we have a casita. If you have a separate room or a separate room with an access, you can do something like Furnish Finder. That app really caters towards doctors and nurses, like the traveling nurses.
Right.
So there's opportunities to make money to kind of offset if you are having a hard time right now with your finances and are exploring different options.
Oh,
which is here.
The options are limitless. Like you already like triggered our next Monday show, and I'm
Wedding
super
venues.
excited about that.
Next week on the.
We're going to talk about No, for sure. Like this is next week.
You wanted to talk about wedding venues?
Not just wedding venues, like renting out like portions
Investment
of your property,
opportunities.
investment opportunity, like the cool shit that we can do in this crazy ass market.
So if you guys have investment opportunities or ideas of potential investment opportunities,
comment below. We want to
drop a
hear
line.
about it for sure. Yeah,
what have you learned today, Miss Miller?
that
Wrapping up the show.
opportunities are endless,
And they're knocking on your door.
They are, and you just have to believe in the universe because it's very magical.
And I want to thank you here for joining us. From me, from Ashley. She makes very cute babies, and she's delivered one here today. So thank you for joining us. If you want to leave any comments or questions, we'll take them, and we'll see you next Monday.
Wow.
Oh, wrong one.